Hey, credit union community. Today, we're picking up a conversation we started back in episode 27 with James McBride and David Sussman, where we talked about 3 key drivers of credit union growth: member engagement, cross-selling, and outbound marketing. This time, we're taking it further. What's still getting in the way of effective outreach? How can you build a true service-driven culture? And what metrics actually matter when measuring outbound success? Stay tuned and find out. Welcome to Grow Your Credit Union. This is the podcast where credit union leaders gather, learn, and grow. I am your host, Joshua Barkley, and with me is my lovely co-host. She's a big Trekkie. She's the talk of Texas. I could go on and on. Becky Reed. Becky, what's going on?
Howdy, y'all.
You know, I was thinking about you because when we were in Phoenix together, you took the Waymo self-driving car, right? You were taking that self-driving taxi. And I had a bunch of flights last week. I was in Detroit. I was in Connecticut. And I thought to myself, what if there was a Waymo plane? Would Becky be willing to board a plane with no pilot? Becky, I'm dying to hear your answer on this because you are like a guinea pig that is willing to be tested, and you're willing to test anything. Would you get into a autonomous plane?
Well, I would say initially no, but honestly, it's not that much different than a car. So I wouldn't be opposed.
Any of the providers, if you're listening and you want to test your autopilot plane with Becky Reed, contact her on LinkedIn. Okay, Becky, let's kick into the show. But before we begin today's show, I want to first mention our sponsor, PFP Services. Today, we welcome our sponsored guest, the Chief Value Officer at PFP Services, Jim Ahrens. Jim, welcome to Grow Your Credit Union.
Thank you very much, Josh.
Credit unions know that growth depends on proactive outreach, but many still struggle to execute it effectively. Jim, from your experience, what are the biggest roadblocks preventing credit unions from being truly proactive in their member engagement?
Well, it's a difficult task and one that our credit unions actually talk to us about a lot. Before we had member engagement up and running, we listened to what our credit unions were saying, their desire to make outbound calls to their membership on a consistent basis, on a regular basis. So we decided to try to put our thought process together to try to solve that problem for them. And that's how member engagement was born. The first thing that we did was we developed a new department at PFP called Member Connect. And Member Connect's sole function was to get people trained, up and running on the phone, making outbound dials on behalf of our credit unions every single day. Those people needed to be driven and motivated to make those dials. We had to put together incentive plans for them to earn extra money based on their results. We had to listen to the messages they were leaving for members and make them more and more effective. We had to control the call volume, how many calls they were actually making every day. Consistency is a key with making this outbound phone call. It is just one phone call. It's not multiple phone calls. But we just want the members to understand that the credit union is here and it's your lifetime financial ally and partner for the future. And that's the focus of the phone call.
I love what you said about financial ally. That's a great distinction between some spam caller that is trying to annoy me, right? Becky, you were a CEO for around 30 years. So if anybody knows, it's you. What are some of the roadblocks that prevented your credit union from being really good with, let's say, outbound calling or being proactive in that type of manner?
Well, I think credit unions in general are reactive and not proactive. We had something at Lone Star Credit Union that we said, be the doctor. And what that means is you're actually diagnosing a problem and you're providing a prescription for that particular problem. And it's not selling. There's lots of different names for it, needs-based selling, consultative selling, that kind of thing. But selling in a credit union, that kind of can be a four-letter word. We've talked about that before, because culturally, right, we're really a service model. But you're really not serving your members appropriately if you don't really understand what their problems are. And members, a lot of times, they will call the credit union and they have already figured out in their head what it is they want to ask you to do, because they've come up with the solution themselves, right? Maybe I need a loan, maybe I need this, that, or whatever. And instead of just trying to do what they ask them why they need that. Why are you calling today? I understand you said you needed a personal loan for $1,000 to pay your light bill. Let's talk about that a little bit. What other options have you had? Did you have to pay your light bill last month? So now you're trying to figure out, do they need a line of credit? Maybe a credit card is something better. Maybe they have equity in their vehicle, get them a lower interest rate. Whatever it might be, that consultative approach requires a different cultural mindset. And outbound calling specifically requires you definitely to have a reason for calling, right? So you should have some data there that is giving you some information about what you might want to be asking the member about, as opposed to just calling and saying, do you need an extended warranty?
Yeah. So Jim, talk to me about what Becky just said, because she's absolutely right. So when you get someone on the phone, how are you ensuring that the conversation is relevant? Are you bringing up some data? Are you, sort of going over information about the member prior to the call? How are you sort of making sure that that call is quality? There's a quality interaction that's taking place.
Well, we start off by examining the member profile that's in front of us each and every call that we make. Know that which products they currently have at the credit union so that we can have an intelligent conversation with them regarding those products. It's definitely a combination of finding out what makes the member tick. But before we get to that point, we're going to talk to the member about something that the credit union has that really helps them. That might be a financial wellness program, something that the member can take advantage of at no cost that they might not really be aware of, and how it can improve their financial position. That's when we then pivot into the how and the why the credit union is there as a benefit for them, and how it might be able to save them some money by doing some fact finding, some needs analysis, asking questions, even sharing stories with a member, listening to what their concerns are with every conversation, and then turning that into an opportunity to show how the credit union can fulfill or help them with the problems that they face each and every day. We all know that we're bombarded with financial offers from various sources. Well, members are too. And they sometimes forget, hey, the credit union offers this same exact program, only at a more quality way that can save me some money, and I can keep all my finances centered at the credit union. I don't need to go outside for financing an auto or a low rate credit card, et cetera, et cetera.
What I love what you just said, Jim, was regarding the conversation doesn't have to be transactional, meaning my interpretation of what you just said was essentially you're trying to give the member what they need, and that doesn't necessarily mean it's an extra product, or doesn't even necessarily mean it's something that you're trying to sell to them. I heard a credit union executive mention next best action. They said, we don't use next best offer language anymore. We use next best action. And I think what you just said is pretty congruent with that next best action methodology. Yes?
Absolutely. Yep. And a member might not really be in the market for anything right now, but just the fact that they're hearing from their credit union once a year to have a conversation keeps the credit union front of mind. And when they do have the need for a product, they're going to remember, hey, the credit union does offer this, and I can reach back out to them and talk to them about getting this started. So it's got its short-term results, but it also has long-term results because you're developing that relationship, and you're going to hear from the credit union every single year.
A lot of credit unions focus on training their teams to cross-sell effectively. And I know for some of you out there, cross-sell, it's a dirty word, forgive me. But training alone does not always translate into action. So, Jim, from your experience, how much of successful cross-selling comes down to training, and how much of it is about building a culture where employees naturally look for ways to help members?
Well, it's definitely both things, because I think, I'm old enough to tell you that it used to be features and benefits that we talked about, and that's old school. You have to evolve the conversation. You have to train how and why the credit union is a benefit for people and break it down into reality. There was a time where check cashing booths were on every corner and people lost 10% of their paychecks because that's how they cashed their payroll checks. And credit unions changed that. And the same goes for loans and any other financial product. When you are saving the credit union member time, money, and adding convenience to their lives, there is no way that you could call that selling. You're solving problems. You're helping them. So that's the way we train our people now, is to be solution oriented for each member that you speak with, letting them know that, we got your back. We're here for you.
Becky, how did you go about trying to make a successful sort of cross-selling / training program? What was your methodology around giving people the education to be able to be proactive with members and not come across as sleazy, let's say?
Part of it is walking the talk. And I think that it really is a culture thing, because you can train people and that's a short period of time to train them maybe what to say in a particular instance or a particular philosophical approach, that we take from a culture perspective. But unless you're living it, then they're not going to do it. And so what we did at Lone Star is we created that consultative solution providing culture across the organization, regardless of if your position was member facing or not. Because at the end of the day, everything that we do impacts a member in some way. So for example, an accounting person was trained to be a solution provider to an MSR. An MSR might be talking to accounting for whatever reason. It could be, the member had a check that bounced, or they're asking about overdraft protection or an ACH direct deposit, or whatever the case may be. And so the accounting person needs to ask some questions to understand what is really the situation and what are you trying to solve, because the accounting person themselves might know about options or features or benefits that Jim just talked about that the MSR has absolutely no idea about, because they don't work in accounting. They don't deal with payments every single day. And so it really comes down to walking the talk. You can train all day long, but unless you live it and breathe it every single day across the organization, it's not going to happen everywhere.
Yeah, Jim. And that's sort of a great point that Becky makes, is like cultural reinforcement. So like, what is your philosophy around that? Do you feel like people need to be trained every 90 days? How do you maintain that cultural reinforcement so that you're optimizing those opportunities for cross-selling?
We have a culture of internal communication. So we share stories, we share wins. I have one right in front of me right now. We contacted a member this week who let us know that she had fallen behind on her auto payments because she lost her son in a tragic accident. And that was a moment for our person who had her on the phone to empathize, offer her support, and acknowledge the fact that the credit union is here to work with you. And we connected her back to the credit union so that she could work out how to catch back up on those payments, because she used the money that was in the credit union to pay for his burial. So it's those kinds of things that make people really open up to the fact that, we're not selling. We're here to provide a service to a member who doesn't know where to turn. And those kinds of stories we share internally all the time.
This episode of Grow Your Credit Union is sponsored by our good friends at PFP Services. For more than 50 years, PFP Services has worked exclusively with credit unions to grow membership, drive loan and deposit product growth, as well as non-interest income to the bottom line for their partners. That's why they are announcing their groundbreaking 2025 seminar series, Access, Your Credit Union's Currency for Organic Growth. This dynamic seminar, set to take place in select regions across the country, is designed to challenge and transform how credit unions think about their most vital resource, access. With the evolving landscape of financial services, credit unions must assess and elevate their reach and engagement with members. Whether through physical branches, digital avenues, or over the phone, true value is measured by how effectively you connect with the communities you serve. In this seminar, industry leaders will guide attendees through an in-depth personal assessment of their credit union's access points. From broadening your reach to enhancing member experiences, this seminar will empower you with the tools to elevate your credit union's impact, expand your member reach, and enhance your connection with the communities you serve. Visit familysecurityplan.com/credit-unions to learn more. And by the way, the link will be in the show notes if you are interested in learning more as well. Outbound marketing is often judged by stuff like cost per lead or response rate percentage, but those don't always tell the full story, do they, Jim? How should credit unions think about the ROI of outbound engagement, and what are the key metrics that actually determine success in your opinion, Jim?
Well, I neglected to mention that, yes, measurements. You got to measure everything that you do, because in order to improve anything, you got to know where you are today. So from outbound dialing to making those connections to sending leads to our credit union partners, everything is measured. But we think that the best lead that we can provide to our credit union doesn't cost them a thing. And that's what we provide. So our outbound calling program does serve our credit unions well for that need. And that's a proactive approach, similar to what Becky just said. The return on investment, well, sometimes you're going to, I have an example actually that a credit union told us about this week. They said of the 68 loan leads that we got last month, we just wanted to, maybe it was a couple months ago because it took some time, but they said 33 of those actually turned into a closed loan. And that's a 48.5% closing rate. So we thought this is great information to have. We wish we could get it from all of our credit unions because we are sending thousands of leads every single month. But those are the kinds of ROI questions that we have. And when we hear that, we know that we're supporting them in the right way.
Now, let's dig deeper into that, Jim, because I'm not going to let you off the hook there because I've seen some of your spreadsheets. I've seen the data you collect. It is absolutely ginormous. You have a CVS receipt length data entry sheet that you use that is just absolutely bonkers. So let's start with sort of the metrics. Let's pick a handful of metrics that you think are key when it comes to understanding the effectiveness, aside from close rate. Let's look at maybe some ones that maybe, I don't want to call them vanity, but some just top line metrics that can just identify the health of an outbound program.
Sure. The first one is reach rate. So for every dial that you make or every voicemail that you make, how many of those members actually do you end up having a conversation with? And we know that here in our call center, that number is between 30 and 32%, depending on the credit union. So you're getting that return. Then you have to know when you have a member on the phone, how many times do you transfer that to the lending center or to the deposit product center? In our case, it's to an agent to have that conversation with the member. We know exactly how many members, and it's about 75%, say, yes, I do want to have a conversation today with someone regarding the credit union. So we have that transfer rate. Then from there, there's also the close rate. And then we also have a sky look at the whole thing. So if a credit union sent us a file of 30,000 members, we have a conversion rate. So we know of the 30,000 members we received, how many did we actually deliver a product to? And that's our conversion rate. So we're constantly monitoring those things. If anything is off, we're tweaking what we're doing. Before any call is made, we're sending an email. We know exactly what the open rate is on those emails, just to let the member know that we're going to be calling them. So I know I went backwards a little bit there, but like I said in the beginning, we're measuring every single thing that we do and tweaking for results when things are off a little bit.
Becky, you like to talk about vendor relationships and show me the data. Show me the ROI. There are a lot of vendors out there that they're not coming correct with the numbers where it's like, I'm paying you money. I don't exactly know the impact you're providing me. So when you think about what Jim just said, do you feel like when you were running your credit union, do you feel like you had good numbers around some of these types of metrics that Jim is stating here?
Without third-party assistance, no. And most credit unions just don't. You just talked about miles and miles of spreadsheet data, right? Credit unions in general have poor access to that kind of data. And that's one of the reasons I think that many credit unions don't start an outreach program like what Jim has been talking about, because if they do, they don't have the tools necessarily or the expertise to really understand how to appropriately benchmark if their program is successful or not. It tends to be very rudimentary. That's because credit unions, we are really experts at helping our members. We are experts at funding loans. We are experts at making sure that the service level that they receive is top notch. We're experts at understanding their name and calling people by their name. We are not experts at data analytics. We are not experts with understanding ROI from a marketing perspective, especially. We are not marketing people, just like generally credit union people are not IT people. We're not business development people generally. Now, you can hire that skill set, but when you look at the core of what credit unions are good at, it's not that. Partnering with folks who can provide that level of detail and help somebody at the credit union understand it and articulate it to an executive or to a board member, that's really powerful.
I think it is too, Jim. And I think that could be one of your major differentiators at PFP is the tracking and sort of the data that you provide to substantiate what you guys are doing from an outbound perspective and many other perspectives. How much data do you provide a credit union when it comes to your activities? I know you probably don't give them the entire spreadsheet that you showed me, but maybe you do.
We try to provide as much data as we possibly can. Every single time we pick up the phone to set up a visit to an employer group, the credit union knows that we made that call. They know about all of our member engagement outbound calls. Every quarter, we're going to send out an overview of all of our channels to our credit unions. And this is not something that we were good at all along. This is something that was built 25 years ago. Business intelligence, which is now a department, did not exist. Now it's a full-fledged department with multiple people in it that is all about data and analytics and trying to help us improve as an organization, trying to help us perform better for our credit unions. So it's been a very, very valuable tool in our advancement through time here.
That brings us to the end of the show. Jim, I would like to get your final thoughts or final plugs. Go ahead, hit me.
You know what? Don't be afraid. Go down the road, test it. And if you need any help, we're here to help. So reach out anytime, whether you want to do it yourself, whether you want to outsource it, PFP is here to support you.
Jim, if somebody is liking what you're putting down on this episode and they want to get a hold of you personally, right? What is the best way to get a hold of you, Jim?
You can just email me. That's J. Ahrens is my last name, AHRENS, at pfpservices.com.
Becky, final thoughts or plugs regarding today's episode?
I think that what PFP offers is something that a lot of smaller credit unions in particular haven't necessarily ventured into. But I think it's a pretty low lift. It's kind of one of those low-hanging fruit. If you haven't tried it yet, it's probably not going to cost you a ton of money to just give it a try. Because of the data that is available, it's very quick to find out if it's actually working. So credit unions do a poor job of doing kind of proof of concept or pilots or dipping their toe into the water. They tend to just go all the way in, they jump right into the deep end. And sometimes they wait too long to jump into the deep end. And so if you want to start working on member engagement, the program that Jim and his team offer there is something I think is worth checking out. So take a look at it.
And if you want to get a hold of Becky Reed, I will just tell you how. It is LinkedIn. Every episode you listen to and Becky Reed is with me, I'm going to say LinkedIn. Hit her up on LinkedIn. Or, Becky, you're all over the world, so you're traveling constantly. Maybe you'll run into Becky at one of the upcoming conferences or some type of event.
Yeah.
I'm looking forward to seeing you soon. We've ran into each other a couple times now, so I'm excited to see you again. I would like to thank Jim Ahrens, Chief Value Officer over at PFP Services, for coming on today. Becky, of course, I got to thank you. You're the best co-host in the entire world. And I got to thank our sponsor, PFP Services, because what they do is really awesome. They're bringing the data together for you in addition to outbound and many other services. Let's just hone in on the outbound. You're getting outbound and you're getting all kinds of analytics and data around the effectiveness of what they're doing. I can't think of a better partnership because, as Becky said, if they're working for you, you're going to know it immediately when you check out the data. So it's kind of a pretty low risk partnership in my humble opinion. So please check out PFP Services if that is something that you're interested in. I also want to send a special thanks to you, our listeners, for continuing to support and listen to Grow Your Credit Union. Remember, if you like the show, please follow us on LinkedIn, follow us on your podcast player of choice, and share episodes with someone who would benefit from listening. If you want to be a guest or you would like to talk about sponsorship opportunities, head to growyourcreditunion.com to learn more. I'm going to say it again because they told me to say it again. growyourcreditunion.com to learn more. Thank you for listening, and we will see you next time. Take care. Bye-bye.